Welcome to the deep dive. Today, we're unraveling a bit of a financial puzzle, really. It involves a company you definitely know, 3M.
Mm.
On the surface, right, they've just delivered what seems like fantastic news, raised profit forecasts, strong earnings, global trade tensions easing up.
Oh, sounds good.
Exactly.
Yeah.
And yet their stock actually pulled back a bit. It's, counterintuitive. So today we're going to try and understand exactly why that happened.
Yeah. Our mission really is to take a whole stack of recent sources. We've got a detailed Reuters report, some in-depth analyses on their growth outlook, and just give you the core insights.
Right.
We'll look at how things like shifting trade dynamics, their own strategic moves, and even, market psychology all kind of weave together to tell the current story of a giant like 3M, but, without the usual information overload.
Okay, let's kick things off then. Right off the bat, one of the biggest positive signals we saw was 3M raising its full-year profit forecast for 2025. So what's driving that optimism?
Well, the core reason really is a significant easing of U.S.-China trade tensions.
Ah, okay. That's huge.
Yes. China, just for context, accounts for about 10% of 3M's global revenue. And they signed a comprehensive trade deal with the U.S. back in June.
Right.
So this directly allowed 3M to raise its full-year adjusted profit forecast. They're now looking at $7.75 per share.
Which is up from what they said before.
Yeah, up from the earlier range of $7.60 to $7 per share.
Yeah.
And, this adjusted profit figure, it's key because it strips out those one-off things, gives a clearer picture of their core business health.
That makes sense. So a clear financial benefit from these easing tensions. But how did that translate specifically into their tariff estimates? Because those have been a major headache for so many companies.
Oh, absolutely. It translated directly into savings, really.
Mm-hmm.
3M cut its estimate of the net hit to their 2025 profit from tariffs.
Okay.
They now project it to be just 10 cents per share.
Wow, only 10 cents. That's down from what?
Well, their earlier projection was 20 cents to 40 cents per share. So, yeah, a really significant reduction.
That's huge.
It is. And just to give that some more context, back in April, the company had estimated a, staggering $850 million potential annualized impact from tariffs, before exemptions.
Right.
And the lion's share of that, like $675 million, was tied directly to U.S. and China tariffs. So this trade deal, it just directly translates into hundreds of millions in lower costs. That's why that per share hit shrank so much.
Got it. So it sounds like 3M isn't alone in benefiting from these trade shifts then. Is this a broader trend we should be watching across other industries too?
Absolutely. Yeah, this isn't just a 3M story. Following agreements between the U.S. and other countries too, like the U.K. and Vietnam, other big companies have started to reevaluate their financial outlooks.
Okay.
For instance, Johnson & Johnson, the pharma giant, they recently have their tariff-related cost projection. They're now estimating about $200 million this year. And 3M CFO also mentioned that about 90% of the total tariff hit to their annual profit is actually expected in the second half of the year. So the benefits are really starting to flow through now.
Okay, so the forecast is up, tariff impact is down. Sounds good. What did their actual recent financial results, specifically for the second quarter, show? Did they back this up?
They largely did, yeah. For Q2, the company reported an adjusted profit of $2.16 per share.
Okay, and how did that compare to estimate?
That was better than Wall Street was looking for. The estimate was around $2.01.
Nice beat.
Yeah. And their total quarterly revenue came in at $6.16 billion.
Which also beat expectations.
Also exceeded expectations, yeah. Analysts were penciling in about $6.11 billion. So, pretty solid results overall.
Right.
And we even saw analysts like Evelyn Chow at Neuberger Berman saying she expects a whole slew of bottom-line beats from industrial companies in Q2 after seeing 3M's numbers. She noted that, quote, tariffs have been better than expected.
Okay, on the surface, those Q2 numbers look fantastic. Revenue beat, earnings beat. So, given such a strong performance, why did the market react with a pullback? The stock was down about 2%. What were analysts maybe looking for that wasn't quite there?
Yeah, this is where it gets a bit more nuanced. The analyst outlook is actually quite mixed, which is interesting.
Okay.
We've got firms like Wolfe Research and Bank of America. They're sticking with buy ratings. And they actually raised their price targets recently to $186 and $170.
Yeah, citing the good results.
Exactly, citing the robust earnings, strong operating margins. Deutsche Bank also put a $167 target out, showing confidence in the business resilience.
But
But tip ranks, which kind of aggregates these things, shows a pretty split view. You got some hold ratings from firms like Wells Fargo, Mizuho.
And what's the reasoning?
Their concerns seem to center on, well, a few things. Moderate organic sales growth, it was around 2%, which maybe isn't spectacular. Some persistent execution challenges within the company, and just, continued cautious consumer demand, particularly in the U.S. market.
Right. The US piece seems important. Okay, let's maybe zoom out a bit then beyond the immediate numbers to 3M's longer-term growth picture. What are the forecasts saying there? And maybe more importantly, what's their actual game plan for the future?
So looking ahead, Simply Wilson, for example, they're forecasting annual earnings growth of about 6.2%.
Okay.
And revenue growth around 3.4% annually. They also project a really impressive return on equity ROE hitting around 74% in 3 years.
74% ROE. That's high. Can you just quickly remind us what ROE tells us?
Yeah, sure. ROE, return on equity, it basically shows how efficiently a company is using the money invested by its shareholders to generate profit. So yeah, a higher number like 74% usually indicates pretty strong performance.
Got it.
And A Invest also emphasizes 3M's restructuring efforts. They highlight a healthy mid-single-digit path for EPS growth that's earnings per share and that high ROE, even if revenue growth might be a bit slower compared to some competitors.
Okay, EPS, earnings per share, just the profit divided by the shares out there.
Exactly. Simple measure of profitability per share.
So these long-term projections, they sound pretty ambitious. How exactly is 3M planning to achieve this kind of growth? What are the key strategic moves they're making?
Right. So this isn't just about financial targets. They outlined a strategic pivot during their 2025 Investor Day. It signals really a move away from some past issues towards areas they see as high growth and high margin.
Okay, like what?
Well, their medium-term plan focuses on a few key things. First, accelerating organic growth, specifically in industrial safe vary. Third, achieving high single-digit annual EPS growth. Fourth, keeping a tight rein on capital spending, targeting 100% free cash flow conversion.
Meaning turning all their earnings into actual cash?
Pretty much, yeah. Cash that's available to reinvest, pay down debt, or, crucially, return to shareholders. Which leads to the last point, committing $10 billion to capital returns.
$10 billion. Okay, so they're serious about returning value.
Yeah.
Where is 3M actually seeing this growth happening now across its different business segments and globally? Which parts of the world are driving it?
Well, their Q2 performance actually showed that all their main segments, industrial, transportation, and electronics, and consumer, all delivered organic growth. And that was for the third quarter in a row.
That's a good sign, broad-based.
It is. Regionally, though, the growth primarily came from Asia-Pacific and EMEA. That's, Europe, Middle East, Africa.
Okay.
Meanwhile, U.S. demand actually stayed flat.
Flat.
Yeah, making U.S. exposure, as one report put it, a key drag on their overall growth right now.
Yeah.
And that definitely explains some of that cautious analyst sentiment we talked about earlier.
Right, connects back. Okay, so despite all this positive movement, the strategic planning, what are the key risks or headwinds that 3M still faces? It surely can't all be smooth sailing.
No, you're right. There are definitely still factors that could impact them. First, there's that slow consumer demand we mentioned, especially for big-ticket items like cars and consumer electronics.
Okay.
Second, while the tariff situation has improved a lot, it's still technically a risk. That estimated impact is now maybe 10, 20 cents per share, but it's not zero. Remember, it used to be forecasted around 60 cents.
Still something to watch then.
Absolutely. And lastly, probably the biggest elephant in the room is the ongoing litigation, particularly around issues like PFAS chemicals and those combat earplugs.
Right. Those have been big headlines.
They have. And while it's really hard to put an exact number on it, these legal battles can just drain substantial resources and management attention.
Yeah.
And they definitely impact their GAAP earnings. That's the standard accounting earnings. And maybe more importantly, their free cash flow. The actual cash they have left after running the business.
Okay, this brings us right back to that central puzzle then. After everything we've talked about, the raised profit forecasts, the earnings beat, these strategic growth plans, easing trade tensions, why did 3M shares pull back about 2% despite what really seemed like undeniably good news?
Yeah, this is where market expectations really come into play. It's a classic market conundrum, really.
How so?
Well, think of it like this. Sometimes good news isn't good enough if the market expected even better news. If a company's success, or at least a certain level of it, is already kind of baked into its stock price, like Everyone expects a star athlete to break a record. Even if they perform incredibly well, maybe just match their personal best, the market might react with a bit of disappointment because that ultimate expectation wasn't met.
So the good news was already priced in, essentially.
Exactly. The phrase often used is, the stock was pricing in too much too soon. It means the market had already anticipated, and maybe even slightly overvalued, the positive news before it was officially announced.
Right.
Investors were likely hoping for maybe stronger domestic momentum, given that flat U.S. demand, or perhaps just more upbeat commentary overall, especially after the stock had already had a powerful 50% rally over the
Wait,
past year.
super really? Wow.
Yeah, so after a run like that, it's almost like the market was asking, okay, that's good, but is that all you've got? Needs more fuel to keep going higher, perhaps?
That makes a lot of sense. So there you have it, a deep dive into 3M, a company really navigating a complex global landscape right now. We've seen how easing trade tensions can significantly shift a company's outlook,
Huge impact?
how those strategic pivots are designed to drive that longer-term growth, and, fascinatingly, how market expectations can create these intriguing paradoxes, like a stock pulling back even after strong earnings.
Yeah, and this really raises an important question for you, listening. How do these big picture elements, global trade, corporate strategy, market psychology, how do they influence your own understanding of how companies perform?
Right.
What maybe stood out to you in 3M's journey today? And how might you apply that kind of thinking to other companies or industries that you're curious about? Something to mull over.